So I'm gonna actually start recording this. So whatever it is that you're having challenges with, that's what I want to look at today. I want to spend that time to look into. I think last week I wasn't around, but I did a video. Uh, I did a video analyzing the market last week. So I don't know if you guys checked that out. If you didn't, you can always check it out. I'll put the link in the Telegram chat. But I can also put the link up again today so people can look at last week's session. This week, I want to have a more close session with you guys, but if you want me to just jump straight into analysis, I wouldn't mind doing that. We've got a couple from Mr. Ease already to go to, so I'm looking to perhaps actually really going through and then look into my questions. So we go Euro, JPY, CHF. And so Mr. Ozo, you're looking a little more into JPY this week. Is there any specific reason? Is there something that should be happening that we need to look into? So we have Euro, JPY, CHF, NZD, GBP. So those are the four. This is quite a lot. Those are the four stated right here. I can look into each of the COT, the seasonality and probability, and probably come up with more than the four combinations here. But I will look at those four first, then see if we have other combinations. So if you have more assets you want me to look at, please, this is time to actually post it up, and I'll do that right now. So the first thing first is, let's go to CO2 report, seasonality and probability, right? Now, if you don't have access to the tools, you can get it directly from the website. Also, I noticed something on my Telegram today when I came on. I think the chat bot that we're using, I've actually put into the group, must have been basically belongs to, I don't know whichever group created it, but you can literally subscribe for it and he actually runs your Telegram group for you. So I think that chat bot from the creator of the reporting. So I'm not sure if it's going to keep working on the group. I really hope it does because it does help things out because most of the time I'm not the group. But he might then come up with things like, oh, you need spam or anything like that. You have to be careful. That's that it's a false flag because it's the bot itself that's having problems. So possibly people are paid for the bots and they're not getting specific services. So I'm still using the bot at the moment until I find a replacement. But it's just something I think I need to point out to you guys in the meantime because I saw that on my what's it called, my Telegram group. So I just thought I'd put that out there. So we go into the analysis and we look at the Euro and GBP. Okay, so let's see what we have for each of these assets. See what's available for each one, and then see which of the opportunities we can capitalize on. First, so with CHF, we like the market goes in two different directions. Now, keep in mind, what we look at in CO2 report, just commercial, we look at the long or the short, the changes over time. That's all we look at. We look at these figures right here. So ideally, you want them to be swinging to one side or swing to another side. But when you have them piled up together like this, it means market can equally go up and go down. I really like it that if you're piled to both sides, at least one side stands out a lot more. Which in this case it does, but not as much as I would like it to be. So I'll put it as short, but I'll put a star next to it because the long part is also in play. The next thing to look at is NZD. So in this case, we have NZD going in 1,080. For people that don't know why I do this, basically commercials are three categories in the markets: commercials, non-commercials, and then non-reportable. Now, commercials are people that don't really make money off of the movement. They're not into speculations. They're people that need maybe someone New Zealand dollars, for example, at the other side of the world because they buy equipment from New Zealand, for example. Now, what happens is you cannot trade in, pounds in New Zealand, so you have to convert your pounds to local currency and to buy whatever you want to buy. So those guys tend to be ahead of the market because they know what is happening more in terms of they use it for the business. It's their duty to know more because they're trying to save money, right? They're trying to save cash. So that's why we follow these guys. I can increase the volume from the sound card. You can see up there, but I think it will be very loud if I go to the next one. But I think this should be better.
Is it better now? It should be better now, I think, because I've switched it to the sound card, external sound card.
Yeah, it's better.
Apologies, I didn't really know that it was on the internal one for the laptop, and that's tucked away. So I've switched it to the sound card. Now, hopefully, this damn thing doesn't cut out as it does every time on Zoom. That being said, so let me continue the analysis. So far, I hope you guys heard what I've said, but if you haven't, apologies. What I'm explaining is there's three categories: commercials, non-commercials, non-reportable. And commercials are people that use, the funds they get to trade in another country. So when I say trade, I'm not meaning physical trade like we do, but to buy goods or services in other country. So someone in UK, for example, want to buy something in New Zealand, for example, you need a local currency of New Zealand. And the main reason we follow those guys is they're not into speculations. Now they're more into using the funds they get to carry out their business transactions. And for that reason, some of them have access to information we don't have access to. So they're not normal guys. They're people in industries, companies like Apple, Nike, banks in some cases. So they do have those information we don't have, and that's why we follow these guys. These guys, non-commercials, are just speculators, people that try to make money from the market like you and I do. So I tend not to follow them a lot because these guys are more wrong, and these guys get it mostly right anyway, but not all the time, but they get it right a decent amount of time. And non-reportables, yeah, they're just a flowing category. Probably some people that have a whole lot of money doing, whatever, God knows. Right? They're not classified basically. So New Zealand dollars, we have that going long, right? So that's going long. Let's check the next one we have on the list. So pounds, ooh, wow. Yeah, the death of the queen as well, and the new king coming in. It literally shows. Funny enough, the country is actually having two opinions about the monarchy at the moment, but that's a discussion for another day. So long, I'm gonna put star there, and I'm actually gonna put the short next to it, so keep my eyes open, because this is heavy. This is a lot of amount, and these non-commercials are actually pointing short. And if they're pointing short, I really want to swing more to the long side anyway. So I tend to do the opposite of what these guys do. So we have 42,000. It's a lot of positions. Just keep that in mind. And then US, oh, this is heavy for US. US hardly has this amount of positions coming in. So there might be something new coming into the market. Keep in mind, because I don't really check the news most of the time, so I might not know what's coming in. But US goes as long. To be quite frank, I'm just going to start this all the way. I'm going to start this all the way because the figure is close, very close. It is too close, to be quite frank. So it might swing anyway in this instance. So I want to be very careful. Oh, okay, Japan. Oh, Mr. Uzo, you might see something with this JPY, because I saw most of your 3 of the 4 you called anyway is JPY. So I don't know why, but this is showing something right here. So maybe you have a news you want to share. Maybe there's something happening at that side of the world. Maybe interest rate, increase or some. What the hell did I type JPY again? So if you have any information in regards to that, I'll be keen to know more about it. So we'll put that as long. This is negligible because it's negligible. Like 600 to 21,000. It's literally, you can ignore that. And then we have euro going short. Now, just by looking at this too, this euro and the JPY, I would have literally, put money on euro JPY going short, because euro is going short, JPY is going long. The figures are very massive, but because we have more tools to narrow things down, I would literally put, a pause on that and analyze even deeper. Okay, so let's check. Check what we have on seasonality. I want to check euro first, just to see what euro has to offer. So where we're somewhere around 18th. So it's somewhere around here. Let me just zoom that in a little bit. So this is 18th right now, and euro. So if you look at these chart, right, 5 years said euro is meant to start dropping and going down. Now 15 years also shows that, and 24 years shows that, but they bounce back and the drop starts simultaneously on the 21st, right? So now 21st, if I'm not mistaken, should be Wednesday, right? Yeah. So 21st seems to be Wednesday. Now, if euro drops on the 21st, or it might drop on Monday, which is tomorrow, but slightly kickback. So the entry can be between tomorrow or the 21st. Now, I know that this is showing, the 5 years is showing consolidation right here, bouncing back, but so far the 15 and 24 years are also showing down, and the overall picture is going down. I might say, to be the safest, going on the 21st, exit on the 26th. So we go euro 21st to 26th short. All right. So we have that going short on that spectrum. Then the next thing to do is check JPY. Yeah, let's see what JPY has to offer. Oh, okay. It's gonna look good. On the 18th. So we're currently right around here. So 19. Now, the problem with JPY is the 5 years is telling me something totally different. Yeah. Right here, that's where we are now. So it's telling me that on the 20th, I mean, 5 years also still look like up anyway, but we might have that 20th going up until the 24th. No, 20th to the 24th, 20th. So JPY. Okay. Now keep in mind, this is just me doing my own personal analysis. I do welcome everybody to do their own analysis. I'm not saying I'm going to be right 100% of the time. So, it's just a caution. So it's just a disclaimer out there. You have to take everything that I put here with a pinch of salt. Market isn't going to play out exactly how you want it every single time. So I would recommend everyone do their analysis as we move forward. I'm just here as a point of reference to help out. Thank you, Mr. Ozo. You said CHF JPY interest rate coming up on, yeah. So the interest rate for CHF and JPY coming up. Okay, so basically there's a lot of interest rate news coming in, which is beautiful. I mean, for the JPY one, for the fact that I see that massive spike and the long side, most likely JPY might increase the interest rate, right? They might increase their interest rate, in which case, if it does, JPY would go up in the long run. So this is where we currently at the moment. We're somewhere around here. Now, if everything is correct, JPY might rally up until October, before we see a drop again. So, but for example's sake, or to keep it all light, we can go in on the 20th and come out on the 24th, wherever if you want to just be on the safest bet, just quick in and quick out. So the next one is CHF. So already Euro JPY is already looking like a short for this week coming true. So the next one is CHF. So what do we have on CHF? Whoa. Let me zoom in right here. So CHF, we're currently around here. So it doesn't really, let me take out the 5 years chart, doesn't really tell me much. It's telling me on the 20th as well, there's going to be a slight up move, but then slightly confusing to me. So overall, actually, CHF might actually go long from the 20th, and that might just only last a few days. Now, I don't like to take those 2-3 days straight. To me, I mean, it's good, but I'm a bit skeptical. But for example's sake, just in case you guys want to take it, a trade, or you already have an analysis done based on this, you can use that maybe as a consensus to decide what direction to go. So for me, 2 days trade is a no. I don't really like that. I like a broader amount of time to, for the trade to mature. So let's see NZD, what we have on NZD. Long, right? Okay, so 20. Okay, now with NZD is telling us long, right, on the COT, but from tomorrow or next tomorrow, it should be dropping according to seasonality. So for that reason, I'm going to delete this out of the equation. NZD is not a game. Now GBP, put a star next to it because it has long and short inside of it. Have to be very careful on these stuff. Yeah. So according to the 5 years on GBP, GBP is going to drop. According to the 45 years, GBP is meant to start going up. So there isn't a direct, consensus between both years of the 45 and 5 years because it's inverse, but the 15 and the 5 years look like they're going the same direction and going short. Now, keep in mind, COT report already told us is either long or short. So for that reason, I'm actually going to delete GBP out of the list. I don't want to take that trade. Now, USD, I put a massive star next to it because on USD, it's pointing, both of them are literally looking like the same place. I mean, currently right now, it's telling me that USD could go short from 20th. But if we zoom in, what we can see is on the 19th, right, which is tomorrow, the 5 years start to, let me isolate the 5. The 5 years start to pick up and start going up. But if you isolate 15 years, also starts to pick up on the 21st. I think 38 years start dropping. So for that one, the correlation isn't clear. So I'm just going to delete that, leaving me with just Euro, JPY, and CHF, right? Now, this combination alone, I think, is about to assess 20 or so trades, 20 trades to come. But because, let me see, because what was initially selected was Euro JPY, CHF JPY, NZD JPY, and GBP JPY. So we can access all those except from GBP USD. So GBP USD would be the only one I can access out of that. But we do have for CHF, we have for Euro, we have for we don't have for NZD, but JPY does that for us anyway. So let's look at Euro JPY. That one seems like one of the most exciting one for me anyway. So let's look for Euro. All right. Now, what the probability tool does is it tells us what's the percentage of win on a specific date. Now, this is done by a lot of calculation, historical facts, and all of that stuff. So it's just more like it's teaching us how the casino works. You know, in casinos, you have that 51, 52, 53, 54% win, you know, which the house has over whoever is playing. And that amount literally guarantees the house always wins. You know, if you play 100 times, 54 out of 100 times, for example, the house is always going to win. So for that reason, you do not want to play against the house. You want to play like the house. So when it comes to trading, you want to only play the game when the odds are in your favor. So if I'm looking from 21st to 26th to go short, I have to see a bigger percentage point in short, which is sell between that time period. Okay. So 21st to 26th. Now we're expecting Euro to go down because COT report shows us that, and seasonality shows us that. Now, I know seasonality was showing us that on, I think on the 19th, which is Monday, but to be the safest, we should look and going in, you know, on the 21st. Now, from probability tells me not to go in on the 21st because there might be, you know, it's only a 48% chance of me having that trade going in my favor. So I better go on the 22nd now. So in this scenario, I have those 2 days, and knowing me, I like 3 days in a row anyway. So what I have here is Euro JPY go short from 22nd till 26th. So out of the trades that I want, you know, you want me to check Euro JPY, that's sorted short 22nd to 26th. Now let's check CHF JPY. Okay, so I mean, I do have a non-conventional way of approaching the market. I just believe not just approaching the market from a technical perspective could be slightly more dangerous than expected. You have to see the underlying and understand what other people are doing and what the history of the asset is to determine what the future might be. So hence why my trading strategy just, you know, is a lot different. So for we're looking at CHF JPY, we're looking at CHF wants to go long on the 20th. Same time, JPY wants to go long, right? But I put that as a star because actually this shouldn't even be in the list because I already have that as short. I think it's because of the small long that I had. That's why I put it. So ideally, CHF shouldn't even be on this list. So we can then use just JPY to assess the trade itself. Since we know JPY goes long on the 20th, so what we want to look for is CHF JPY on the 20th going short. Yeah, so we have it on the 20th going short, but 21st it kicks back, and then 22nd goes short, 23rd goes short. So we can do, even though I like, remember, 3 days. 3 days has to be in my direction. But for this reason, because of Saturday, we can do short again, 22nd till I think 23rd. So after 23rd, I'm out, literally, of that trade. So which covers the second trade. I mean, these days look good. The 19th, 20 look good, but my alignment doesn't point me towards those dates. So even if the market is going my direction on those days, I would just wait till I see enough pullback on this date for me to go in. Remember, always going at the wick. think we have time for me to explain the wick in a second, so I should be able to touch on that. Then the next thing to do is think NZD JPY. All right, so NZD JPY, let's see what we have. Okay, so NZD JPY, we have that on 20th as well. So now it doesn't look like it's going to go short because JPY is going long. So keep in mind NZD should go short. But on the 21st, all the way down to 23rd, even to 26th, which were expected, is going short. So a new favorite comes into the game, NZD JPY. It's going short. So all the assets we're looking at literally pointing short this week. Now keep in mind, I didn't assess the euro combinations. We have like 7 euro combinations in this, or 6, because we've done one based on the ones we have on the website. But you can always do that by yourself if you have a membership. And if you don't, just go to the website business.damonpire.co.uk and then click on the pricing and just you can get a membership from there. So that being said, that goes short on the 21st, right? And then we'll do that to the 26th. All right. So those are 3 trades we're looking at. Now, because euro, out of the 4 trades you've called, these 3 are what most likely are in perfect alignment. And you can get some decent money out of. So I can go and then look at euro JPY. Let me make that plain. So euro JPY, right? Now with euro JPY, we know that I want to go into the asset on the 22nd, right? To the 26th. So which means 19, 20, 21, I have no business to be in the market. On the 21st, I might go for NZD JPY first because Monday, Tuesday, I'm a free person. Yeah, Mr. Uzo. You can unmute yourself.
Good evening, Mr. David.
Good evening, Mr. Uzo.
Can you hear me?
Yeah, I can hear you.
Okay, please, I just want to make some little contribution.
Yes,
Now
please.
you're in technical analysis. There's something I want to ask.
Yeah.
Now, for some time, I've been using the candle wick, the indicator, candle wick indicator.
Yeah.
So there, I want to ask, when I do the calculation on daily and weekly, which one is more accurate? Is it better on weekly or on daily?
So
Or
basically,
monthly?
what I normally suggest is it's more accurate. The higher the time frame, the more accurate they become. Now, if we're looking at it for weekly, for example, you understand your wick size will be larger. So if we're starting a new week, for example, and you're expecting the candle for this week to go down, then what you do is you assess the wick for the down candle. So here,
I know how to do it. My question is straightforward. Which one is more accurate? Because over time I've come to observe that the weekly is more accurate, other than because many at times the daily the pullback will always start on the calculation on weekly, more accurate and more effective. So that's what I want to suggest also.
Yeah. So to add to that, basically, if you're looking for a trade that's going to be starting from the beginning of the week, for example, or it's going to last a week, then you look at the weekly. If you're looking at trades that are going to last like 3 days, for example, then you look at daily. Now, to bring it more down into perspective, weekly is your best option, if not monthly, right? At the start of the month, monthly is your best option. At the start of the week, weekly is your best option. Now, if you're jumping into a trade on Wednesday, for example, which we have right here, daily is your best option. Because what would happen is if the asset, you're expecting the asset to go down from Wednesday, most likely during Monday, Tuesday, the asset will already have pushed up from the week already. So by Wednesday, you just get it at the tip of the wick when it's coming down. You understand? So
okay, thanks.
Yeah, in this scenario, I would use weekly actually and use that to even make it more clearer and put it on the point. So we're looking at Euro JPY, right? And we're going on the 22nd. Now we know 22nd is a Thursday. So we're going to go short. So in that scenario, what you do is you do 203 plus 162 plus 97 plus 124 plus 270. So you do that, then you divide that by 5, which gives us 171.2. So for this week coming, you wanted to pull at least 171.2. So market to pull somewhere around here before you even decide to start looking at it. Now, what happens is if Wednesday comes, this is not quite accurate, but you get the gist. If Wednesday comes now and the market is nowhere near here, and let's say the market is here, then look at the daily wick candle and use that to decide where your entry is going to be. So I'm just going to make you a little bit, Mr. Ozo. I hope you don't mind. So basically, what you can also use this for, I don't normally do it, but I do it once in a while. I'll do the daily calculation as well, which is 9 plus 40. So right here, plus 82 plus 72 plus 32. And I'll divide that also by 5. And I get 47 pips. Now, so what I can then do is I can map out that 47 pips. Now, keep in mind, this is not going to be as accurate as if you do it on Wednesday. Wednesday is your best option to do it. Now, when you map out that 47 pips, you now have a range right here. Now, once you get that range, to make it even slightly more accurate, remember, if you do this on Wednesday, that you're going into the market, you're going to get a more accurate figure. So probably Tuesday evening when the market is about to finish, 5 minutes before the market is about to finish, you got that because that's most likely not going to change. Then what you can then do is you can come down and then add your any support and resistance indicator that you have, right? You can add any support and resistance indicator that you have. And when you add that in this scenario, guess what? Right here, this point right here, you see this thick line right here, 144 seems to be a zone that the market could come to. And if I go down maybe like on a 4-hour time frame, if there's more to it, there isn't more in that zone. I'll go into 1 hour. I'm not going to go below 1 hour. And I hope I haven't confused anybody here so far. What I can see is this point right here might be my best entry option. So it's going to be somewhere between my daily and my weekly wick in this scenario. So if I now go ahead and delete all my indicators out of it because it just messes up the entire screen. What I have now is I have a sweet spot right here in which my my entry could be. And then to top it all off, all I just need to do now is to find my, where my what's it called? Stop loss is gonna be. I just do my ATR. Now I can do my ATR on a 4-hour, which is 52 pips. Now, if I do that 52 times 1.5, now a lot of you might say, okay, I don't have 78 pips, which is 78 pips stop loss. But the truth is, if you go in here and you have a 78 pip stop loss, let's say somewhere around here, someone has their mic on. Can you please just mute it for a second, please? Thank you. If your stop loss is around here, the likelihood of being rated is lower. Well, it's 78 pips. This looks like 80, but the likelihood of being rated is lower. And then you can take your profit, your first profit at 52 pips, then your second profit at maybe 1.5 or times 2, which is times 2 will be 104 pips. And your third profit, just leave it to the end of the trade, whichever day that is, which is 26th. So with this, just knowing this, the likelihood of being rated is very low. And if you want to be super, super extra, and I still do recommend being super extra and being super careful, just add your EMAs. I mean, you guys know me already. I have 3 EMAs that I do. Indicators, trend. I do 50, 220, right? So I do my indicator, try and I do 20. And with that, I should have all three. So currently right now, what I can see is on a 4-hour price is trapped between the 50 and the 20. So I go on the daily, I see that they're all down here. So I have no issues at all. I can take my profit here or here, depending on how much the market falls. And my on my 1 hour, it doesn't affect it. Now keep in mind, when price moves up, these are points you have to keep in mind that price might gain support from. So if the EMA was behind the lines, you're much safer. If it's below it, you're still safe, but not safe enough. So I think that's all we have time for today, guys. Thank you for joining. I'll catch you guys in the week trading, and these are the trades we have. So if you have any questions, just hit me a message on Telegram and I'll be able to sort that out for you. I'll put the replay on YouTube so you can watch it again to re-understand what I just pointed forward. Mr. Huzo, brilliant questions, brilliant observation, and thank you. I wish you guys, best trading week ahead. Take care, guys.